In the last 18 months, the amount of gold that was purchased by the world central banks is greater than at any time in history, ever, never before. You look at all of the countries that are joining the BRICS nations, they are massively accumulating gold, all of them. You look at the exchanges, like, for example, the COMEX vault. The COMEX vault has lost, it's down to 29 million ounces in the registered category. It's lost 130 million ounces of silver in the last roughly year and a half. The commercial banks right now are short 9,000 contracts, which is 45 million ounces. There's only 29 million ounces in the COMEX, in the registered category. If everyone who has the other side of that says, I want delivery, there's 15 million ounces of silver that, where's it coming from? The amount of gold and silver that are being bled down from the world's exchanges, in fact, just this week, 144,256 kilograms of silver left the Shanghai Gold Exchange. That's the largest single daily outflow in the 10 years since silver was listed. And so you're seeing outflows of metal, so much so that if you look at if you can pull up, if you do your editing or you're able to do that and pull up a graph of the outflow of silver from the London Metals Exchange, it's a straight line, straight down. The same thing with the COMEX and gold. They're all being pulled down. Last year, not only that, the LBMA, the London Metals Exchange, lost 90% of its zinc and 75% of its aluminum. It's all being bought by countries that, to them, it's the same thing as money. So you are seeing the biggest money in the world use the suppression of price on the Western exchanges as cover to de-dollarize and accumulate what amounts to the lion's share of all the available gold, silver, platinum, aluminum, zinc, lithium, anything that they can buy. What did they just say? I think it's Brazil. I think it was Brazil who said they're nationalizing their lithium mines. The world realizes that we are moving, as Zoltan Pozsar said, into an era backed by commodities. Bretton Woods 3 is a system, as Zoltan Pozsar calls, one backed by commodities and transparency rather than opaque debt instruments. And I think that's what is happening here. The world is accumulating tangible, real things for what comes next. In the last 2 months, we've seen 230 million ounces of silver taken off of the London Metals Exchange in something called exchange for physical, where COMEX contracts are sent to London and the metal comes off. That 230 million ounces that was delivered in exchange for physical is almost 8 times more than is available for delivery off of COMEX. The country of India imported 304 million ounces of silver last year alone. And, in the third quarter of 2022, 400 tons of gold were sent out of Western vaults eastward. That was recorded by Reuters and Bloomberg, the largest single quarterly outflow ever. I mean, there are years where that much isn't delivered. The point of it is that the biggest money in the world for a very long time, JP Morgan, who paid a $920 million fine to the Justice Department for suppressing the metals, the bullion banks suppress the price, and they do so, in my opinion, to support the bond market here in the United States. The biggest money in the world is using the suppression of COMEX by the bullion banks who step on the paper price. Exactly what I'm saying to you. If there are 9,000 short contracts held by the commercial banks and only 6,000 contracts worth of bars backing it, that's not the way it's supposed to go. The market, the paper market, is not supposed to control or drive the physical market. That's the tail wagging the dog. It's the other way around. And so the big money suppresses the price of gold and silver to make the dollar and the US and the Western system seem better than it is. And it's been that way for a very long time. The way they used to do it, when nobody wanted anything but dollar-based assets, is they would lease their gold to the commercial banks, who would then sell it immediately to the market, drive the price down. They were leasing it at 0.5% from the central banks, like a bank like JP Morgan. They would lease gold, sell it to the market, leasing it at 0.5%. They would take the return. When you sell short something, you get money. You have to pay it back. You get money. They would buy treasuries earning 4%, let's say. They got to keep the spread between the two. The big bullion banks have been suppressing the paper price of gold and silver forever. Well, the rest of the world is using it against us right now by suppressing the paper price on COMEX. And to give you an idea of how they do it, the other day, it was a couple of months ago, I asked my head trader, because we hedge all of the gold in our warehouse. Yeah. If I have 5,000 ounces in my warehouse and the price drops by $100, I'm out $500,000. So with that 5,000 ounces in my warehouse, I sell 5,000 on COMEX, and they move exactly inverse of each other. So I'm always market neutral. And I said, Ryan, what does it cost for us to control one COMEX gold contract, which is 100 ounces? $200,000 worth of gold. He said $7,000 in our margin account. That's it. The trade is just a few dollars. So if I'm a commercial bank or a central bank with 500 million in my margin account, I can control effectively $15 billion worth of notional gold or silver. They suppress the price with tremendous leverage, and then the rest of the world gobbles it up when nobody is looking. I'll say it this way. If price was indicative of demand, then why is it that the exchanges, the LBMA, the COMEX, the Shanghai Gold Exchange, why are they seeing record outflows, record deliveries? And why are the central banks buying more gold than at any time in history over the last 18 months if price was indicative of value? Rather, it is misdirection. If you look at the drawdown in supply off the COMEX, and you're talking huge amounts that have been drawn down over the past couple of years. Since early 2021, COMEX silver inventories have fallen from 400 million to 271 million ounces. That's the entire COMEX. Of the 271 million, only 29 million are for sale. The rest of them belong to companies like me or hedge funds, or people aren't selling it. It's just in a COMEX warehouse. Over 28 months, that's 4.6 million ounces per month that have been leaving the COMEX in silver. That's just one exchange. You're seeing the same thing in the London Metals Exchange. You're seeing the same thing coming out of the ETFs. But when you pull out 130 million ounces of silver in 1,000-ounce bars, you've just lost all industrial liquidity. Where if Elon Musk says, I'll pay everyone who has 1,000-ounce bars on COMEX $100 an ounce premium if they sell it to me, you're done. You can't get it back on there and have it reassayed and reintroduced to the system without a very long period of time and a huge cost. When it leaves, it's a one-way ticket. It ain't ever coming back. So anyways, I just think that there's a lot more to it than meets the eye here right now in terms of the drawdown, the methodical drawdown of all the exchanges, because it's coming from very sophisticated people. It is not an easy thing to do. And when they do it, it's never coming back. And that to me is indicative of big money using price and rhetoric to misdirect their intentions of accumulating metals in place of dollars, place of fiat.